morning, traders. Welcome to the TMT stock market strategy video for Thursday, May 5th. Continued weakness in the market, small, nothing really. We gapped down and we pretty much stayed in a range. Actually, we did stay in a range all day, and that's the opening range. And as you guys know, I mentioned many times, put out a 15-minute opening range, guys. Very important. It gives you an idea if we have new order flow or we have no order flow. And as you can see, we have no order flow here. We just stayed consistently in the 15-minute opening range. That tells me that there's no new order flow, there's no new money coming into the market, or at least in the index that I'm trading, so I'm going to go look for something else to trade. And that's really what you should be doing. So you as a professional should understand how to determine, do we have new money coming into markets today or do we not? And the 15-minute range is awesome. So this is something I want to show you guys, all right? Now, let's get into something more in detail. Where are we going for the next couple of days? Where are we going to go? Well, I do think that we're looking for a short-term bounce in the markets. We did have the dollar, and I'll go over that dollar. Caught a beautiful bid in the off the lows, and I did say that the dollar would overshoot, put a little pressure on commodities. We have commodity inflation, guys, across the board. I mean, every commodity, pick one, the grains, precious metals, crude oil, they're all rallying, and that's because of the weak dollar at the moment. Dollar is catching a small little bid. Was up this morning, still up this morning. But now we have gold up in the pre-market, we have the dollar up, we have crude oil up, and we have equities up. So insane market as we continue to see this insanity. It's going to end, and it's going to end abruptly, guys. Somebody's going to win here. Bonds, the equity guys. It's just crazy for what I'm seeing, and that's why you got to use extreme caution here. I am looking at a brief short-term rally, which is going to be perfect. It would fit into the technical analysis overview of the market topping during earnings season, which is about a couple of weeks left. And I would suspect the markets try to rally, get everybody long into heavy resistance, and that's where we will look to start building a short position. I would say at least to start looking to build a short position. I have not called the top yet officially, but I am looking patiently and waiting to see price action tell me on the charts that we have topped. Right at the moment we have not, but I want to show you why I think that we're going to bounce. I've shown many of this chart to you many times. Here is the NAMO, which is the McClellan oscillator for the Nasdaq. Okay, and you know our system. Every time that the Bollinger Bands breaks out of the Bollinger Bands and stays out there for a day or two, and then breaks back in, that creates a buy signal for equities. Now, does it mean that soon right out of the gate I want you to go buy stocks? No, of course not. You have to go look and see if it meets your trading. On top of that, we could briefly push lower and then rally, and that would put us an inside day into the Bollinger Band and create a buy signal. So just something to watch. Be careful here, guys. But I am looking for a short-term bounce in equities. Okay. Now tomorrow's non-farm payrolls. We have nothing really going on today other than initial jobless claims. And then we have some Fed governors speaking later on in the day. But tomorrow is going to be the big non-farm payroll numbers, which will affect the dollar in a very big way, which will affect commodities and, of course, equities. So that is going to be really, really important, guys, okay? Now, let's take a look at the McClellan oscillator for the, where am I going here? For the New York Stock Exchange. Sorry, I lost my train of thought for a minute. I'm looking at something else as what's going on in the pre-market. McClellan oscillator for the New York Stock Exchange. You can see that here, and every time it gets above certain areas of the Bollinger Bands on the up, we get a sell signal, as well as down below we get buy signals. And I circle that to you, and I'm just kind of putting that out there in the rectangular form. And you can see we did get again a same move lower here. So I am looking for a short-term bounce, probably back up into that neutral zone, and then let's see what happens in the next couple of days. But remember, it looks like the market may bounce, and only because of what I'm showing you here. But tomorrow is non-farm payrolls, like I mentioned, and anything could happen. I mean, and news trumps the charts. Just remember that, okay? VIX, okay, at the lows, bullish fallen wedge, did get the breakout, right? So we did get our breakout here, and usually we do get a little bit of a back test. It'll either test or go back into the range. So something to consider. You're at the lows here. This needs to be watched closely, because if we start getting fear and some selling coming in, this will explode higher, extremely higher. So it's something to watch for a possible trade as well. Now here's the dollar ETF, the UUP, and as you can see here, we had a big movement lower. We broke much lower, and then we came right back in. So we're into the apex of this bullish falling wedge, and I'm looking for a break back and then a move higher. Much higher? No. I'm looking for probably the 200. First shot obviously would be the 50-day moving average. Okay. Now let's go into the indexes, and nothing really has changed, guys. I'm just going to run through these real quick. I mainly wanted to show you that we're probably looking for a 2-day bounce. 50-day moving average, doji, kind of lines up right with the McClellan oscillators that I just showed you. That we're due for a little bit of a bounce, maybe right up into this area here, and then look for new lows coming in the coming weeks. Here's our head and shoulders 60-minute. I just wanted to show you 204 ish is going to be the target of this head and shoulders pattern, and we're almost there right now. So right around here would be that. Maybe if we flush this morning here and then move back up, that would be probably solidify this head and shoulders 60-minute bearish pattern. Here's the weekly on the transports. Now the weekly charts have head and shoulders patterns throughout all of the indices. This one actually triggered and actually back test, as you can see, and then actually broke back up, and now we're just kind of going sideways here. We need to see a break below the 139-ish. Once we break that, we'll hit that 200, and then we'll see these other two areas come into play. But as of right now, we're just kind of holding steady in here. So let's see what happens. Let's be patient. But again, not looking pretty on the weekly charts. Daily charts a little bit better, but the weeklies don't look so great. Here's the IWM. Again, fell below that big area of support. But remember, a lot of overhead supply. And what happened? It failed. Okay, and now we're back down again, and the 50 is going to be that target here. Okay, so you could see that the IWM continued to show weakness, which is a good gauge of risk in the markets. Diamonds, another doji onto 50. So again, logical area for a bounce. Coincides nicely with the McClellan oscillators that I just showed you. And then lastly, the Qs, as you can see here. The Qs really got hit hard on a lot of the earnings that came out. NASDAQ had some poor earnings in tech, as you know. So we'll see. Keep it one step at a time. Let's watch price quote closely. I do see, again, a couple of days of a retracement rally, but I think that's going to get sold into sometime next week. But remember, non-farm payroll numbers come out, guys. Very, very important for tomorrow. Anything can happen. Have a great day, guys.